Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here on this 7th day of September 2012, it's a Friday, is the market, and we're looking at a daily chart of the S&P. This is actually the S&P 500 E-mini futures contract, front month in nature, still September. And of course, we're looking at a last print of 1434.75. I hope you guys can see that right there. Beautiful blast higher we saw yesterday on Thursday. Absolutely wonderful for everyone, most parties involved. In fact, some have argued that it's a short capitulation, suggesting that the shorts have finally given up. But we, of course, were telling our clients that we had a two-bar reversal buy setup right here, or it was right here. I'm not sure. We'll have to maybe look at another chart. Actually, it was right here. So this was a two-bar reversal buy setup that we had been mentioning with the support around 1395 to 1400. We can actually look at that in a second. But we did expect, we were overall generally bullish. We had been bullish for quite some time. We can look back in the notes to see when that was, but definitely we've been bullish for quite some time. Particularly, I believe it was around 1350. Is when we went to officially bullish. So that's another 100 points or so for our official market timing. All those that are following this video religiously certainly have been capitalizing on our official free market timing that we use to gauge the market, and of course being fully bullish with the market just about 10% off a record all-time high, which is very exciting. And most of the people out there, again back to the short capitulation, most people out there are long. Most people don't trade on the short side. Most people favor the long side. It's the investing side. So definitely a great day yesterday for most parties involved, and particularly us as traders. We're not only going to make money on the short side, but we're definitely going to make money on the long side, and certainly we did yesterday. We'll get to that in a second. I believe Valerius, our new tracking model, supplementing the map black, was up around... I don't know, we'll have to look at that in a second, but it's a pretty good day yesterday. So that's a quick look at the daily chart. Obviously, we're fully bullish, have been fully bullish roughly since about 1350. Market's at 14, almost 1450. What's more impressive is we finally got above this little resistance here around 1400 to 1420, and looks like we're falling through again today. Of course, it's a summer Friday, almost fall. September 21st, unofficially falls here with the passing of Labor Day. So definitely impressive situation from a directional movement perspective. Obviously see fully bullish, intermediate term fully bullish, well early stages bullish one would argue, short term bullish in terms of momentum, intermediate term bullish as well, again in early stages on the ITs on both scenarios, and of course the trend fully bullish, price technicals fully bullish, and there you have it, a full bullish bias. Now we're going to take a look quickly at the sentiment picture. Obviously we'd be expecting a little bit of a pullback here. The market, this is the mini Russell, just off to the races, shot up like a rocket recently. In fact, the precursor was on the 4th intraday. Maybe we can look at that in a second, but the small caps were absolutely on fire on this day, and that was kind of the early indication that we were going to have this follow through. Someone was looking to buy the market in anticipation of one could argue the ECB, the news out of the ECB being favorable for the market on Thursday. And that was really the driving force behind Thursday's market. But again, people know ahead of time what's going on, and that was actually the indication. Again, that's why we, our chartists and our technicians, is we follow exactly what the market is doing. Certainly not what's coming out of, the news media. Again, people are going to know things ahead of time. Look at our Congress. They're going to pass laws that are going to affect business, corporate America, and they're able to trade stocks ahead of that news being released. Certainly the epitome of insider trading, but of course they're allowed to do that, and if you don't think it goes on in the the Eurozone, it certainly does. Probably everywhere. Nevertheless, back to the, get off the soapbox there, back to the sentiment picture. Obviously, we expect a sell-off. Here we go right here. We have these extremes in complacency. Extreme in complacency, boom, we get the sell-off. Extreme in complacency right here, boom, we get a sell-off. 2 or 3 days there. Another relative extreme in complacency, but didn't really get the sell-off. In fact, that was kind of an indication as prices rose, so did the fear level, and this is what you get, new highs in price. But again, we're back to levels of extreme, levels of complacency. Again, we'd like to see probably a reading around 50. Here we've got a 49.71. Here we've got a 37. We didn't have much of a sell-off on this one, so again, you put it in concert with other indications, but it's definitely a good indication that just in concert with the fact that what goes up must come down. Look at this market; it's hugely higher, so one would expect definitely some retracement. When that's going to top out, we don't know, as we just are breaking out. So you definitely don't want to be talking about the short side too much on a breakout, but it certainly can happen. Worse things have happened. 1487 is the last reading on the VIX. Again, that can kind of bounce around the bottom, as you can see right here, bouncing around the bottom. So that's not the best indication in terms of sentiment, but again, in the grand scheme of things, definitely we're seeing some extreme levels of greed in the market, most reflected in price, certainly in the sentiment background picture in terms of buying options, call options on the market relative to put options. So we definitely need to see some puts, people afraid that the market is going to go lower for it to thus go higher. So there's a quick look. We'll take a look while we're here. MRSEM, our beautiful MRSEM, got stopped out just a little while ago. Unbelievable. But it happens, rarely for this system, but it happens. As you can see, beautiful green dot portfolio. And there's a little bitty stop out that we just had, little bitty stop out, but this system, again, this is going back a decade, has been one of our favorite models, certainly a top tier model, but gets hit. But having said that, this was primarily a hedge for our overwhelming long exposure. Not overwhelming, but more than the short side on the way up. So this was essentially just a hedge. So we'll go ahead and minimize that. Just wanted to take a quick look at that, and we'll be looking at the chart of the intraday market. Okay, so this is Friday, still a summer Friday. Unofficially, officially no. Officially yes, unofficially no. Given the A teams are likely back at the helm following Labor Day. Of course, it's a holiday shortened week, but there you see the price direction yesterday on Thursday. Again, these are proprietary indicators, how we use to gauge the market, what we use to gauge the market, and you see these are just beautiful sessions where you just see this amazing building to a crescendo of bullishness. Absolutely a beautiful thing to see in terms of price. So these are the days, in fact, we've mentioned, you're going to have days like this, then you're going to have days like this. Most of the time, you're going to have days like this, and you're going to try and stay out of the market, manage losses, so on and so forth. That's where the real grind work comes. But then you have days like yesterday that are about 80. I'm sorry. Make 80 to even 90% of your profits. Let's say 80% of your profits, the old 80-20 rule. The other 20% of your profits come from 80% of the trading days. These are 20% of the trading days. 80% of your trading days are going to be like this. One could argue it might even be 70-30. Nevertheless, you get the idea that you just got to hang around for the big moves, and we'll take a look at our performances here in 1 second. But a quick look at the intraday. No. Not going to put a trade out today on an intraday, particularly given the move yesterday. But as you can see, getting some negative divergences here. Certainly it's hard to match what we saw yesterday with the market going from essentially 1400 to 1430 roughly on the ES. And certainly we're going to get some divergences here, actually bearish here, diverging there, negative divergences there. So we're not really going to put out any day trades. If we were, you'd certainly be buying for 35 to 40, and we'll put that out as a 2-star if you want to buy from current market prices of 35 up to 40. So there you go. You have a quick look at the intraday analytics, and we'll keep on moving. We'll go ahead and minimize that. Evo, beautiful yesterday. In fact, I'm not sure we didn't have a system trade yesterday. I'm not sure if we didn't have a system trade. I'm not sure if that grammatically makes sense, but most all of our models trade. Anytime you get a unanimous status of your varying trading methodologies, it's really going to be a good indication that you're probably going to see fruition of your profits. And that's pretty much what happened yesterday. There you see the Evo, beautiful trade going long early in the session, holding for most of the session, getting out, well, holding for the whole of the session actually. So pretty impressive day was the Evo. The TF active, obviously Evo didn't trade here. I actually had a stop loss there, and then this one didn't stop out. The active and Evo EM active, kind of the same thing. The Evo ES, beautiful trade. Longs goes long at 15, nice 15 points, 750 a contract. MCM jumping in on about 6 contracts, only one of which was a near scratch. The rest were profitable. We can pull up the old strategy performance report of that. Not really a green dot trading model right now. This is probably a tier 1.5, not really a tier 1 trading model. $81 average trade net profit, not the best. So that's definitely probably a tier 2 actually. Yeah, that's a tier 2 right there. But still, as you can see, over the last 5 years, $150,000 after slippage and commissions. Not too bad. Evo EM, Evo YM, kind of similar scenarios, different contracts. Swing System 15.0, jumping out just before the big move higher. In fact, Swing System 15.0, this is probably tier 2 or 3. This would have to be a tier 2. This, when Strategy Runner was going on, actually led their leaderboard for quite some time. Swing System 15.0, and you see it's just 50,000 over the last 11 years. $10,000 max drawdown, 164 average trade net profit. Can't beat that. Every time you place on a trade, you're going to make $165 per contract. Not too bad, but as you can see, it's almost been straight up. And Green Dot just recently had a pullback, and now we're back on the upside. Winner, 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 winner. Couple little scratch trades. Chicken dinner. EMD System 1.0, look at this long. Of course, it hasn't been the great, but OMG. Look at this. 6870, and we're now at 1,570. Not too bad. Almost $4,000 a contract for that. But as you can see, it had a really wild time in the market correction of 2008. But then you look at that. Had that wild drawdown, but then it just blasted to the upside. So this has been really, again, a decade. It's probably actually one of our first trading models developed actually in 2003. So as you can see, sometimes the rides can get a bit wild, but not too bad. Again, we're getting a pullback here, so we're definitely going to get it moving to another favorable phase. This is definitely an opportunity. The time you want to be getting involved in something like this in this trading model. And as you can see, we can actually move over and look at the detailed. Oh, why is the detailed not showing that $4,000 trade? Or is it? Well, this shows us 87,000. Yeah, it's not showing the detailed of this profit because we are long almost $4,000. Nevertheless, that's EMD System 1.0. The Aussie Forex long right here. Long at the 1 level, 1.02102, 1.039 is where we are right now. So we're going to go ahead and move along and look at the Day Trader 5.0, catching a beautiful long yesterday. Again, so many of our trading models were long yesterday. It was just ridiculous. And, well, I can't say it was ridiculous at all because the Swing System 5.0, I take that back. Swing System 5.0, I believe, not the 15.0, was the leader. And as you can see, loss, but they're going long at 13,000 for the Dow. So in another nice winner for the. Whoa! Look at those winners. Yeah, Swing System 5.0 was definitely leading Strategy Runner. I'm sorry, it wasn't 15.0. I thought 50,000 was a little odd to be leading SR. Nevertheless, we'll look at some other trading models. ES30MX. So these are our elites. We'll just kind of save these. I don't know. I'm not sure if we want to talk about these. We'll just let the performances speak for themselves. EVR3 filter, R60F, not really winning there. EMDS in another long right there. You can see EVR3 VSR. Look at that. MRSE PTL books the winner. Doesn't get stopped out as the MRS EM did. So we already talked about those. There's the ISRD. Beautiful. Exit's a beautiful winner here. Beautiful winner. Look at that. Absolutely amazing. Absolutely amazing. CBR, EVMCM we already talked about. R30A. Just green dots portfolios all the time. MRSCM PTL, green dots. EVR3. Check out the ES30MX, green dot. Absolutely insane. Stellar. So, that's a quick look at the trading models. Now we're going to pull up how they're doing. So right now you can get involved with the Valerius. And so here's the Valerius. This is how it did yesterday. This needs to be taken out. Let's take a look at attachment. So this is the Valerius, and you can really get a scope. Not really on this EQ. Started with 50,000 on October 31st, November of 11. That was November, and dang it, this is blocking the date. So this is just yesterday. You can see September 6th. It's up 1.6%. That's of actual capital, which, as you can see right here, this is our third-party tracking model, and also auto trade provider. But you can use several brokers, pretty much any broker you'd like. 93,955 is the total system equity right now. It started with 50, and so that's a pretty impressive gain. And the actual cash is 97,532, but there's that was MRSCM was holding on to that loss, which has now been exited. And you can really get, I mean, again, started with 50, pretty much at 90. We target about 100%. And that's pretty impressive considering that 35% for a fund is absolutely insane, even for managed futures. And there you go. You have 100%. We're on pace for 108% is our current annualized return for Valerius. So you start with 50,000, and it trades. We can go back over here. It trades, here was a 9 lot. That was a day trade. This was July, sorry. 9. But as you can see, it'll day trade some Russells, but most of the time, and actually when you see these 6s, this is kind of a doubling up of exposure that's exited. So anytime you see something like that in the ES particularly, that's a small glitch that they have. So you don't really get 6 contracts. It's actually only 3 at that point. But it trades probably an average of 3 to 5 contracts. And you start with 50,000 there. You can get a real vantage point of how it's done with the green underlayment. You have we had some technical issues there, worked them out, and this is kind of the real portfolio here. New equity high, drawdown, new equity high, drawdown. We've had some clients waiting to get in drawdown in Valerius, and it's just not giving it to them. And sometimes that'll happen, and it's a good thing for pretty much everyone involved. But we would like to see a drawdown. Nevertheless, that's how Valerius is doing. So you make 50,000. So it's made $40-some thousand, probably $40,000 after slip. After $40,000 after slippage and commissions, and it lost my train of thought. So $40,000, and so what's our fee? So you put in $50,000, you trade on average 2 to 3 contracts, 3 to 4 contracts, you make $40,000. So what's our fee? Well, there you have right there. Right now you can get it. It's $29.99 a year, so it's $3,000. We make you $40. You pay us $3. It's like 8% for the privilege, and right there. But now it's only $18.88 for the entire year. You're talking about like $150 for a month. $150. This is This is 15 years of development right here. This is the product of 15 years of development, and you're paying basically 150 a month. That's pretty amazing. That's pretty amazing. That's pretty amazing for you as a client. We're going to take a quick look at Aurelius, and there you can see there. It's been absolutely insane. We actually did a special intra-month update. You can see up 78% since inception, which was roughly April. Was actually April of 11. 78%. You can peruse that, and then you definitely want to scroll down and take a look at all the substantive documentation. So that's pretty impressive. And there you see the special intraday, intra-month update given yesterday was such an impressive day. And it's usually we just post monthly, so August 31st. And there you see, so that was a gain of this right here was a gain for the month, or a total gain of 69%, but now it's 78%. But if you look at the smaller version of Aurelius, 152% is the return. This is the actual minimum account. So you can actually get started with Aurelius, with the Aurelius 50, and there you get a return, actual return. Obviously, after slippage and commissions, since it's the actual account of 150% through September 6th. In actuality, it's been absolutely insane. If you do a rolling 12 months, September, you could back this out. So rolling 12 months, this figure over the last year is actually pretty amazing in actual returns. So you can do the Aurelius. That's going to cost you quite a bit more for the privilege of doubling the performance of, let's say, a Valerius. And so particularly on a rolling 12 months, if we go back to Valerius began on, when did November, so here we go. So this was October, Valerius began in November. So we do, I guess we'd have to back those out. So either way, it's just going to cost you a little bit more, but you know, the choice is yours, what you want to do. So that's a quick look at our trading models. If you have any questions, go to the website, chat with support team live about any questions you may have about your portfolios, your requirements. We can customize to meet your needs. And let's quick look at the market, the intraday, the daily. A quick look at our trading models, what we offer. Now, getting started is almost as easy as 1, 2, 3. Simply subscribe to your portfolio, make your choice. I suggest you chat with the support team or shoot us an email to admin@MiniAnalyst.com. Before doing that, make sure you're in the right. We're going to be able to meet your needs with said portfolio, and you know, just have an account with one of many brokers, and or set one up. It's about a 10-minute process online on an application. Fund the account and you're ready to go, and you can participate in returns like we talk about each week. Hope you've enjoyed the video, and we will see you next time.